I'll explain in a bit. I haven't shown you guys this trade, but this is basically part of Wyckoff theory. This is like an advanced theory, but I want to show you guys. Okay, there we go. Okay, there we go. A little late on the entry because I don't know. My mouse was freezing up a little bit. So once again, why do I like this? Because we're at the top. We're at a very important area. And once again, we got this wedge pattern forming, as well as, so there's sometimes when the market just there's a higher here and it just goes a little higher and then we're going to get a nice big drop. Okay, so that's part of something called Wyckoff theory that I have not really gone over with you guys, but this is one of the biggest trades you can get. So for this, we're probably going to look for, target towards here. So we're probably going to look at the 60 to 70 range for our target. I'll explain this more in depth later, but mainly it's based off of what I've already said. Right? We're at the top of the resistance, but it hasn't really gone much further than that. So we're likely going to get a reversal here, back down, or some kind of pullback. And we've gone straight up all the way to this point. So this is when the market typically loses steam. You know, if this was the resistance zone and it poked out of it, then this is typically where it's starting to lose steam. Same thing when it's coming down, straight down. Once it dips below the resistance zone, it's starting to lose steam down here. So it's the same kind of theory, but just the other direction. So, you know, markets go up and down. They don't just go straight up. They don't just go straight down. But when it goes into an important zone and it goes a little bit beyond it, depending on the situation, but typically this is when it loses steam. And so this is when I'm looking to possibly short. So, you know, this is just getting comfortable right now. So with that dip back, I'm actually going to move my stop down once it surpasses this low right here, because it could go just a little higher and then go down. So I'm going to see how it reacts here. So everything I say while I'm managing the trade too, just kind of pay attention to my thought process and then ask questions, because there's a reason behind everything I say and why I say it. So if you don't understand why I'm saying something in particular at any time, let me know. You know, so, but even if we don't talk about it at the time, then we could talk about it after the trade. Yeah, so if this thing breaks through, I would say this low right here, then we're moving our stop down. Moving our stop down right there. Above that pivot. But it might just go back a little higher before it goes, so that's why we don't want to put it there yet. Yeah, but this is basically a two-legged pullback here. See, down, up, and then down. So if you're not in yet, this would be a good time. And then your stop would just be above this pivot. Okay, so it went down, so we're gonna move our stop. So now we're in a great risk reward. About three points for this is 7.5. 8 points, right? So I mean, that's points. I don't even know how that breaks down in fractions, but we'll just say 3 points. 3 points for 8 points.
What's your strategy of stop loss and profit setup?
Oh, hello. My bad. I didn't realize my mic was off. But what'd you say?
For your strategy that you set for your custom.
What's it set at? I don't know. I think like 20 points or something, but it's not exact because.
Oh no, your what do you call it?
My target.
Yeah, your just your strategy, like when you press your button, like
I think it's like 10 or 20 points. I forgot exactly, but the thing is, whatever I set it at, that's not the real target. Like I move it, so I just set it to have something there. But
yeah, because I set mine at like 4 to 8, and then 4 to 8, and then I got in late, and then it just stopped me right
so I set one for you already.
Oh, yeah, I'm on my
No, no,
laptop
no.
now. Yeah.
So, yeah. So he's
Yeah, we'll probably put our target right there. What'd you say? Hello? You hear me?
Yeah, I got it now. I just set a like a good number there. Like you said, we can always set it up after we get in.
Yeah, yeah. So, but didn't I set one for you?
Oh no, I'm on my laptop now. The one that you did was on my computer.
Oh,
Yeah.
I get it. I get
Yeah.
it. Yeah, yeah. Just set it like 10 to 20 points. Just set it so it's far enough away where you don't get in and it gets you out right away. So,
Yeah,
and
I was scrambling for it, and then it just stopped me out at like 4 points. So I'm like, okay, I got that profit.
okay. Yep. So in the future, yeah, just set it further out,
Okay.
like much further out. Yeah, because as you can see, I could just do that in a split second. So but yeah, for you to even get 4 points that quick, I mean that's actually a really nice trade. So and then you say you got back in, right? So it's that profit on top of the one this one's about to get to. So
Yeah, when you say entered in, I pressed entered in, and then it just went right down straight fast.
yeah, and if it ever does that and you have a 4 point profit, I mean that's, to me, that's great. You know, if I could just click a button and within a few seconds $200 profit, that's no problem. That's not something I would complain about at all.
Just want to set my strategies right.
Yeah. Actually, I think we're gonna let it get into here a little bit. Let me see. Yeah, so I don't know if you guys are in the Among Traders group or is it Among Investors? Are you guys in any of those?
I think I'm both of them.
Both of them. Okay, so in the Among Traders group, so this guy Robert, he just posted something really good because he posted about Wyckoff as well. And that's basically the theory behind what I just did, you know, and that's basically this thing. It looks complex and weird and whatever, but this is so important to understand.
Yeah, that's why, like, when I look at them, like, what is going on? I don't get that.
So it's like a complex model, but once you understand it, that's how the market moves. That's like the theory behind the movement. And that's what that's the trade we just took. We took a Wyckoff trade. But once again, all that stuff, head and shoulders, Wyckoff, wedge pattern, all that stuff only matters at important levels. So people are looking for those things without it. Here, I'm gonna take that profit. Okay. People are trying to look for those kind of things without it being at an important level, and that's why people get in trouble. All right, nice trade. So again, this is how we maintain success in these markets. You know, it's just we have to wait for the right trades, take the right trades, take high percentage trades. You know, so although this is not our normal trade of mapping out and it's in the trend, right? It's not that trade. It's not that trade that we take once it's trending, you know. So this one, because I did the overall analysis of the overall market, you know, and that's what this was based off of. You know, once again, I was saying this is the resistance zone. This whole area is very important. And it poked right above it. So I was like, okay, now it's exhausted. So, and it went straight up too. When things go in a straight line, that's not going to last long. So this is beyond the chart. I mean, this is more in-depth chart reading. You know, this is beyond, I guess, beyond the charts. The market is moving really fast in these big bars. That typically doesn't last very long, especially when we're at an important resistance zone and we've broken above it. Then this is why I was just looking for some type of pattern, some type of indication that we're going down. And we got that, and we got a Wyckoff. Well, we had a wedge pattern setting up, which I was drawing with these red lines. But then we also had, look at that. And then I used Fibonacci to get to my target and right on the money. And then look at that, it just shot right back. So, I mean, so you guys see how, like, when I take trades, it's very precise and exact. Like my entries, my targets, this is how calculated we want to be. You know, we don't want to randomly guess an entry, randomly guess a target. Like, we have to be comfortable with our tools. We know how to utilize them. So as you can see, I targeted the 60 to 70 range. First of all, I do believe we're going lower. In fact, I'm sure we're going much lower, because usually after a Wyckoff, we get a pretty big push. But you know, once again, we're only focused on taking a high percentage target, and that's it. It doesn't matter if it goes for $10,000. We're here to get ours, because we never can. We don't know if it was gonna go for like a $10,000 move. We didn't know that, you know. So we only know up to a certain point. Anything beyond that, it's possible, but we don't know. So we want to take profits where I'm not going to say we know, but we have pretty high confidence. So Fibonacci levels, as you can see, 0 to 23, 0 to 30, 50, 60, 76, and 100. Sometimes I target 38 to 50, sometimes 50 to 60, sometimes 60 to 70. It depends on the situation. Nothing is exact, or nothing is the same every time. Our targets won't always be the same. Our stops won't always be the same. It really depends on the situation. But because we were at an extreme high, right? I had strong confidence that we're going to reach this level, because I actually believe we're going to go much further. So this level should be a high percentage area that it'll reach, which it did fairly quickly too. And so because of that, that's why I targeted there, and it got right there. So this is where things could get messy, because when it gets here, it could come back or it could go down, either way. But I was confident it would reach here. After that, yeah, once again, it could come back and then go down later, or else it just gets messy, or a bunch of things could happen at this point. And as you can see, look, it's struggling and now it's starting to come back. So, and the thing is, once again, how did I know that? It's just experience. It's just doing this over and over and over every morning for many years. You know, you just learn how to see the market activity, and you could kind of, you know, what they call read the right side of the chart. You know, so right side of the chart is everything that has not happened yet. Left side of the chart is everything that has happened. So we want to get to the point where we can see all this, and then we could pretty much draw out what's going to happen next. All right. And that's basically all I do every day, right? I see what I see, and then I draw out what's going to happen next. And so that's a skill that people can develop, but it takes time. You have to have seen enough charting, been through enough market conditions over and over and over and over and over. So yeah, that's why sometimes I'll see something, I'll say something you guys don't quite understand, or you're not sure why, and just ask questions. But some of it, even if I say it, it doesn't make sense at the time. But you watch charts with me long enough, you'll start to understand why I say things and when. But yeah, so once again, we were at very important. So actually, I just want to go over Wyckoff with you guys. So this is a theory in the markets, and we'll go more in depth another time. But basically, the idea is this. The key, there's a couple things to understand about this, but the key thing that I want you guys to understand about what we did is this. So this is basically what happened, right? The market flew all the way up, right? And then it climaxed, and then it stayed in a little range, and then one more test, right? But then that one fails, and then we start the move down. That's literally what just happened. So you guys kind of get that? I mean, I know you guys don't understand the logic yet, but you kind of get as far as just the drawing. I mean, understanding the reason behind it, that's a different discussion, but you guys kind of understand at least just the graph of what just happened.
Yeah.
There's a good gist of it.
Yeah, and that's, I mean, look at this thing. We could put it side by side. It's literally identical. Okay. So this thing, all right, I'm gonna put it side by side with a chart right here. I'm gonna take all this off. Okay. So if we look at this, all right, you guys see that? Hello?
Yeah.
Yeah, you guys see that? So it's basically what we just got right here. We just pretty much got that same look. So where do we look at for Wyckoff? We look at for Wyckoff at a major support, at a major resistance. So this is something I've been watching and I've been identifying over this time we've been together, but I've never mentioned it because once again, it's a little more in depth. It's a theory that we have to talk about, and it's a little more advanced, so I don't want to go into it. So once again, a lot of stuff I show you guys, there's more to the picture than what I'm telling you, but I want to make sure you guys are good with the basic stuff before I start moving into the more advanced stuff, such as Wyckoff and stuff like that. Because we're going to really have to. The other stuff, we go more in depth and it gets a little more complex. So everything before it, you have to understand really well before we start getting more complex. But there's more stuff I want to show you guys and teach you guys that just know it's coming, but you guys are still learning the earlier stuff. And I don't want to shortcut your learning at the earlier stuff, because if you shortcut that learning, everything you learn after that won't make sense. It'll confuse you, and you want to have down the basic stuff very, very, very well. And that's going to go a long way for you. And everything else just builds off of it. But yeah, it's beautiful. Yeah, that's beautiful. That is beautiful.
That's it's an interesting
Theory.
Yeah,
Yeah.
interesting theory for sure.
Yep. That's why, once again, I want you guys to see it, just so that if we ever see this again, you guys understand. Because remember when I was taking this trade and you were kind of iffy, you weren't sure and stuff like that. It makes sense why you weren't sure, because you weren't seeing the Wyckoff. You weren't seeing the Wyckoff at play here. But I want you guys to see this now, so that next time we're at an extreme high or extreme low, because Wyckoff goes both ways. It's down at support and it's up at resistance. And so we pay attention to it on both sides. It happens at support and then it happens at resistance. So it's one of those things, just like head and shoulders, reverse head and shoulders, wedge pattern. It's just patterns that we're paying attention to and watching for over and over. But we're watching for it at very, very, very specific areas. So
Yeah, we'll see where it goes with
yeah,
that
for
one.
right now, I don't want you guys to even try to understand Wyckoff yet. I just wanted you guys to see an example of how it played out.
Yeah.
A live example, and I wanted to trade it for you guys to see that these things bring big moves. But so if we ever see this again, just know I take Wyckoff trades every time. So our main trades are at support resistance and at what you call it, support resistance, and also
Trend lines. Trend line.
trends. Yeah. So here's the thing: we took our trade back here, you know, but if you weren't comfortable with that, our re-entry where Yang got back in, I believe it was right there. So if you're not comfortable taking the first one, it's totally fine, but catch the next one or catch the next one. All right, one of these two. All right, any of these pullbacks, and I'll draw it out for you guys too. But yeah, Wyckoff is one of the best, the absolute best trades, or trade setups. And I'll keep an eye on it for now for you guys. So don't feel like you have to learn it or know it. I'll draw it out for you when we see it. We might wrap it up. You know, once again, when we get a good profit, we just gotta take that thing. How many points did you get, Ying?
I'm not by the computer right now, so I'm not
Oh,
sure.
okay. But so you got 4 points the first time. Second time, do you know roughly? Did you get 4 points again or
I think it was like roughly 3.
3? Okay, so that's 7 points. You know, and 7 points, 2, 4, 6. That's about $350. Wow, so we got the same. So
Where do you go check for your
Yeah.
grade? I guess.
oh, I'll have to show you. Because NinjaTrader 8's a little different. I say you should ask in the chat because Jack does that every day. But if he doesn't know, I'll let you know, or I'll figure out and send it to you. But
Let's get up.
so
Yeah.
7 points. Yep. So I got 7 points as well, which is 350, and then of course it's only one trade, 100%. So you know, once again, this is how we become. This is successful trading. What we do every single trade, every single day. You know, just whatever the situation is, you know, we just trade it and we don't do anything else. And then we just leave. When we get our profit, we leave. So 350, that's a good profit, and just add it to the list. And so, you know, yesterday we ended up with a $175 loss. So today already recovered yesterday's loss plus more profit on top. And so that's why, even if it's a red day, try to keep it at a minimal red day, because your next green day will likely wipe out your red day and then you're back to profiting. And that's how we want to keep it. So I was actually curious I actually wanted to see it go much further. So yeah, we're in kind of an interesting type of area here. You know, it's kind of trying to go down, trying to go up, more sideways than anything. So yeah, it's kind of in a weird, funky look right now. So yeah, we'll probably just wrap it up here. You got any questions or anything?
No.
No? Okay. All right. Well, another nice day in the books. You know, great job. You finally got your hands wet, you know, and was able to see some profits turn out of that. So, you know, keep that up. You guys are starting to do really good. So cool. Well, if nothing else, then have a great weekend and message me if anything. All right.
All right.